PAC's Fintech series. This is the second in our series on the future of financial wellness. I'm Dean Miller, the president and CEO of PACT, and welcome you on this bright and shiny morning. We were just talking that, in pre-COVID times, we would have been stressing about canceling this with a forecast of 3 to 5 inches of snow. No need to. We are virtual. And this is recorded. You'll be able to share it, go back to it. Again, excited that you've decided to join us here this morning. We've got a great conversation lined up. We'll get to that in a minute, but I first want to thank our sponsors, for which we could not do all that we do to support the entrepreneurial community, including Baker Tilly, Vanguard, and SCI. And you're going to hear from representatives from each of those organizations here shortly. From a housekeeping perspective, you are muted. But you can ask questions, and you've got a chat feature to be able to do that. We're going to monitor throughout, and the panel will go for about an hour till 9:35. And after the program, we will break into subject-specific roundtables. Now, again, this is a new platform that we've been using for the past several months around the world, and what it allows is you to choose where you want to go and have a dialogue, again, a moderated dialogue with our panelists. Allows you to be face-to-face with each other, with our speakers. It's a great networking opportunity. We'll do that for about 25 minutes and finish up at 10 o'clock. So without further ado, let me introduce our moderator, PAC board member and part of Vanguard, founding leader with PAC, Warren Pennington, who is the principal and global lead of Fintech at Vanguard. What does that mean? He can explain that a little further. But what it means is he's on the front edge of some really interesting innovations that Vanguard has been deploying. And welcome, Warren.
Thanks, Dean. It's great to be part of this and love to be part of PACT. And this is a great event. Yeah, as you mentioned, I head up FinTech strategies at Vanguard. What we do is we partner with startups and technology firms and find common ideas that we can use to shape the future of the way Vanguard's investment management group runs. We face off with the capital markets and do a lot in this space with startups. So excited to be here. The next stage of this one, we'll talk about the panelists, right? So I'll introduce briefly each one. So real quickly, I wanted to welcome Adam Holt, CEO and founder of Asset Map. So Adam, you want to give us a little introduction to yourself?
Sure. Thanks for having me, everybody. Great to see everybody in Philadelphia. Yeah, sure. I'm a recovering financial advisor who created a process for myself that helped me accelerate my engagement by visually mapping everything going on in people's lives. And that kind of went viral in 2012 and it's taken over my life. So these days, I'm a FinTech CEO, speaking, podcasting, helping thousands of advisors around the world help clients see their entire financial life on one page.
Sounds good. I'll just go clockwise around the screen. So Phil Schmoyer, Director and Financial Services Sector Lead at Baker Tilly. Phil, can you give us a quick intro?
Yeah, absolutely. Nice to meet everyone. I'm Phil Schmoyer. I'm a director within Baker Tilly's digital practice. So we focus on digital transformation of large, medium, small organizations. Work predominantly in the financial services sector with small startups in the fintech world, navigating regulatory challenges, getting funding, et cetera, all the way up through hundreds of billions of dollars organizations navigate that digital transformation journey. So happy to be here. I'm looking forward to sharing the conversation.
Thank you, Phil. Okay, we'll round it out with Russ Kleiman. Real briefly, global leader at SCI Ventures. He's also largely the brains behind some of this program and some of our ideas, and it's been great talking with you, Russ, about the ideas we have on this discussion. You want to give us a quick introduction too?
Sure. Thanks for the intro, Warren. So I've been at SCI for about 20 years and a variety of different capacities over the term and leading innovation programs, and then most recently leading our corporate venture capital group where we invest in startups within the fintech space. So I get a unique opportunity to chat with a small number, maybe 300 plus startups over the course of a year that live and breathe within the fintech space. And so it gives a unique perspective on where the puck is heading. And so love conversations like this because we kind of see what's coming over the horizon and what may be the disruptors of the future. So it's an exciting conversation to have.
All right. Thank you very much. All right. Let's go ahead and dive right in then. So the four of us have had some good discussions. We've gotten to know each other a little bit. We've talked a lot about really what's going on since COVID. And, The idea is that COVID effectively accelerated a lot of trends that were already underway around the way financial services are delivered, the financial products and the kinds of products that are out there, and the way that businesses operate, and frankly, the way consumers set their expectations. And we kind of came up with two broad themes that we'll talk about today. The first one is around convergence of financial products and services. And second is around digitization, and that's digitization of the way that businesses run and the way we interact with our clients. We also talked real briefly about a third point, which everybody seems to be discussing. We'll touch on digital assets just a bit, but that one will be something we can dive in further in subsequent sessions of this series. So let me start off then with, our discussions have been really interesting when we talked about convergence of financial products. And we talked a little bit about the idea that consumer expectations have really driven this trend that, really we're trying to meet around how you pull together multiple types of offerings together using technology, delivering it in a different way. Really, my question go out to the team. I think maybe I could start with you, Russ. How do we tap into these consumer expectations and anticipate them even?
Yeah, I mean, I think, one of the biggest trends that we're seeing, and I kind of always visually use my hands when I talk, so if I use my hands on here, hopefully people can see them, is that I think there's both these macro trends that are happening within the industry. When you think about that convergence, you're seeing traditional banking and investing converge. You're seeing insurance, investing and banking converge. You're seeing certainly in COVID-19 kind of the awareness of health and financial wellness converge. And so you're seeing a lot of these convergences happen, both from a consumer expectation standpoint, as well as even from a financial intermediary. How do we best service and engage with clients in that space? And so I think you're seeing that dynamic happen where you're seeing kind of these overarching macro trends that are happening at the highest level of that convergence. And then to your earlier comment, I think you're seeing coming in from the side these more technology-driven capabilities and expectations equally manifesting themselves. Things like hyper-personalization, things like being frictionless, introducing gamification, education, and even the notion of social, capabilities and communities and sharing. So you have these kind of overarching macro trends. And so if we even think about, some of the firms that we would almost, look at from afar, whether they're SoFi or somebody like Betterment or some of the other players in the space, those used to be what I'll call kind of the one-trick ponies. They kind of focused on one core capability. But now if you look at what they offer, somebody like SoFi, who maybe started out within the lending and in the refinancing of student debt, now offers investing, lending, credit, and banking. Same thing with Betterment. What you're seeing there is that they're no longer just kind of a robo-advisor in the financial advice space, but now they're offering additional capabilities. And that's driven in part, how do we get greater wallet share and greater margins and capitalize on the client experience, but also it's driven by that consumer expectation.
All right, so maybe we stay on this a little bit. So I think it's going to be an interesting discussion. We're trying to separate out the how, which is the digitization, and the what and the why, which is really convergence. Phil, you've got an interesting background and had a lot of experience in digitization in general. Maybe we try to stay on the convergence side of things. So what would you say you guys have seen in your experience in this space?
Yeah, and I think Russ hit it pretty well. And in terms of some of what you would normally anticipate as being like tangential product offerings or service lines or industries, really insurance and banking and asset management, et cetera. You're starting to see a lot of organizations creating this platform, this ecosystem, whether they have the product or whether they have the connectivity to others to allow to play matchmaker, to make those connections, to put you in touch with the right people at the right time. Really what we're seeing is, and Russ touched on in terms of wallet share and market share, the customer acquisition cost. The customer conversion rate is increasing for some of these partners. You're retaining more business. You're not bringing people into the platform and having them provide all of these different data points, creating this friction, degrading the customer experience, and then they go somewhere else. They're taking that information. And I was on a panel a little while ago with 5 people, and they asked, what's the most prevalent technology that's kind of transforming the way that businesses do business? 4 people in a row said cloud. And so I had to be different. So I agree with the answer of cloud in terms of their reasoning was rapid prototyping, speed to market, scalability, et cetera. But I think the kind of the adoption of the API is really driving, a lot of, this frictionless concept, this simplification of business, enabling data to be entered one place and shared across. And so I feel like that is really helping to streamline our customer experience holistically and enabling that platform or ecosystem type concept.
That's awesome. I'm hoping, Adam, stability wise, but let me just take a quick comment, like while we get settled, is so cloud really makes it easy, I think, for companies, for small businesses to start up and to scale rapidly. Obviously, there's a question mark around long-term costs and things like that. And then APIs are making it possible because you can aggregate multiple different types of financial products and services and create them in a single offering. That was a really important point. And Russ, I think, after we hear from Adam, we can talk a little bit about some of the startup space and different ideas in the company space. Maybe we can touch a little bit on that before we pivot over to digitization. Adam, I've loved my interactions with you ever since we got to know you way back when, and the current products and services you've built. But on the convergence space, how do you view that space?
Yeah, so thanks. And by the way, can you hear me just as an audio check yet again?
Yes. Here and see.
I'd say I'm a tech CEO. I didn't say I know how to use the tech. Yeah, so thanks for having me. I agree with you. Coming from a space in financial advice where it typically has been very toes to toes, nose to nose, there's a lot of kind of legacy platforms out there that drive how we tend to deliver advice in that side. I think there's been a general acceptance and yet reticence to take the analog and the digital and kind of find some happy medium in between them. I know for me, what I tend to see from the thousands of advisors that we work with now is that there's definitely an attention span problem, which is we have all these great technologies. For those of us that are professionals and deliver some form of technical advice, we love getting and nerding out in the kind of technical delivery, but the consumer just doesn't have any patience or attention span anymore. So we've been forced to, and I think what you're tending to see, we tend to focus on adoption of technology is the innovation, right? If I can give you 20 apps, but if you're not going to use them, it doesn't really matter. So I think the real big press in this convergence is how do I still stay human, but just give me more time back and manage my attention span. So I think those are really the kind of big levers that I'm seeing that I think a lot of technologies and deliverers of new experiences have been avoiding. They're just trying to digitize the old legacy experience as opposed to rethink how consumers need to consume it.
Yeah, that you really bring up a key point, Adam, in terms of, and it's something that we've discussed previously, is this notion of really deploying kind of design thinking principles and that human empathy, and that's empathy at both the client level, but also at the advisor level, and really understanding what their pain points are and what their core needs are, and really diving more deeply into kind of the wants and needs and the problems that they have, not just technology for technology's sake. Because for your point, it's not about adoption of technology. It's about, are you solving my problems with that technology, whether you're the consumer or the advisor? And how are we doing that in ways that create engagement, collaboration, frictionless experiences? Those themes still hold true, but you've got to make sure that you're actually, solving a problem, not having a technology and kind of looking for the proverbial nail.
Yeah, I would just throw something else. To clarify, I happen to think that we're not looking holistically as a community enough at adoption, because adoption is a good indication of what the people will actually use. So all this fantastic tech we're building, give you the best idea, coolest thing, make you money, have great ROI, save you time. In the field, does it actually get adopted? And I think that's really the bigger test these days.
Yeah, I think that kind of ties the points together with Russ as well in terms of, it needs to solve a problem. And I know Jeff Bezos says like shiny doesn't last. Having the new, sexy looking thing, like it's great. I download it, I use it. It doesn't do what I need it. I delete it. I move on. So it's great to be first to market, be out there, but continuous innovation and kind of constantly trying to address the problems and move the needle forward, I think is what's going to keep customers. I mean, candidly, I'm part of that generation that has no loyalty to bank, to insurance company, to whatever. I go to the experience that provides me the value I need. I got my homeowner's policy while laying in bed, typing on my phone on an app. And I took that policy, probably paying a little bit more, because I didn't want to have someone call me back at a time when I wasn't available. I think what's really driving a lot of this is that on demand kind of interactivity. I want to be able to engage with you as an organization, me as a consumer, when I'm available and I'm busy. I'm sitting on pack calls, I'm on other calls. Like everyone nowadays is 8 to 5 nonstop video calls. So I don't have time to take another phone call from an insurance agent trying to sell me a homeowner's policy. I want to do it on my phone. I want to do it on demand. So I think that kind of speaks to that customer experience, that frictionless kind of concept of, don't add an extra touch point into my life. I want to engage with you the way I want to engage it. And I blame Amazon on them for everything related to that. It just makes it easy. But
right. I think it's Amazon and Apple. I mean, Apple made complex things simple without any instruction manual, and Amazon just conquered these physical world problems and made it easy for us. I agree. I think we should just weave in the digitization discussion, because I think that some of those talking points you mentioned, Phil, just now around the frictionless and the ease and all that wasn't necessarily about convergence, because if somebody figures out how to make something really simple and you can put it on your mobile phone, you'll click it, and it's just as easy for you as if they had aggregated a bunch of products. So maybe if we could stay with you just for a second, Phil, on like how do businesses look at digitization? Obviously it's for an existing company it's a challenge, and for an emerging company it's an opportunity. But how have you seen that being faced by some of your clients, I guess?
Yeah, it's a good question, and we get that a lot in terms of where to start. Where we have all of this data, we have all of these different consumers. We don't know much about them. Where do we start? How do we start to focus on things? And the answer is always digital transformation, a digital journey, trying to innovate. Any of these aspects is not a one-stop shop. There is no silver bullet to what it needs to be. So we push kind of focusing on the long term. And working backwards. So what's your digital strategy? What do you want to do? Who do you want to do it with? How do you want to be in the market? Defining what success is to you, and then working backwards towards, well, okay, how do we get there? What are the problems we need to solve? What is not going well today? A lot of that component starts to come back to that human-centered design. And really I think Einstein said at one point, if you give me 60 minutes to solve a problem, I'll spend 55 minutes understanding it and 5 minutes to solve. So it's really like, how do we understand across that journey where the pain points are? What are the challenges? What are our consumers really needing and wanting and asking for? And in order to do that, you need to understand them. So spending time focusing on, what are our customers? Who are they? How do they engage with us? What's that journey look like? Where's those moments of truth where they move away from our application? They delete things. they're no longer a daily active user. They don't want to be a part of our ecosystem anymore. They go elsewhere for product, etc. Where are those moments of truth, and then why? And really focusing on that why and improving on some of those things is really where we see the needle starting to move in organizations. Retaining the customers they have, growing market share, becoming more simplified, more digital. And that goes on I use customers and users kind of in general sense, but that's externally facing, but also internally facing, like your systems, your processes, your back office, all of those aspects, understanding where the pain points are and eliminating them.
Yeah, I'll lean into that a little bit as well. I mean, I think one of the things when we think about digital transformation is I think there's both kind of a fundamentally using, from a human-centered design, looking at journey maps, identifying the pain points and the opportunities to reduce those friction points and reduce those pain points with digital experiences. But I also think there's a fundamental element too to equally maybe reshape, looking at the capabilities to reshape that digital engagement and that digital experience and making it more elegant, making it more frictionless. And so I think there's both kind of a, hey, just because in the past we used to print out our quarterly, reviews for you in a spiral bound color printed thing and, flip through the charts, doesn't mean that we just want to make that more efficient. The proverbial, I just want 12 horses to go faster versus a combustion engine, type of model. It's how do we leverage the digital technologies to fundamentally reshape the digital engagement? And Adam, your company is, I think, a great example of how do we leverage digital capabilities to fundamentally create a new experience that's engaging, collaborative, simple, elegant, but also solves the initial problems and the initial challenges of how do we communicate with clients in an effective way.
Well, yeah, thanks. I appreciate it. And it's funny. I thought of something that Phil said that I want to touch on, because one of the biggest challenges, and this is an opportunity, of course, for us to collaborate and, of course, inspire each other. Maybe there's an idea here that anybody can use. One of the things that we were really kind of critical of in our space is, where should we actually invest in the digitization and the technology for our customer? And when we looked at it, as you said, Phil, our customer is the financial advisor, but it's also the consumer of the financial advice in many ways. And what we did is we did this massive survey where we asked them both, what was their journey of working with a professional and, of course, working with a client, and what were the biggest pain points? And what we found, actually, after this massive study over a couple of years, is that there were 10 pain points that both of them expressed throughout the journey. And we said, okay, these are our core investable areas. Can we just tackle one or two of these and actually, use some design thinking to actually apply technology to that specific thing? Because, as we all know, it's overwhelming where you can invest today, right? You can get an app for everything. There's 10 apps for everything. The challenge is that we all have priorities and scarcity. The question is, where are we going to focus our time and energy? And actually, that's available for everybody if you want to grab it. It's assetmap.com/journey. If you just look it up, you can download actually the worksheets and the results of that stuff, because we made it available to everybody. What's usable from that for those of you that are not actually in financial service delivery? Maybe it's time to ask both your consumers and the customers of your customers where their bigger pain points are and solve those problems, those big boulders.
Yeah,
digitize that, right? Focus.
Yeah, and just to wrap up this point, I mean, one of the things we did something very similar at SEI with financial advisors, where we did a journey mapping exercise of core things that advisors do every day: open up accounts, client communications, things of that nature that are oftentimes, challenging both for the client and for the financial advisor. And we identified those pain points and where should advisors invest capital to make those experiences both for them scalable, more efficient and frictionless, but equally, how does that benefit the client in creating engagement, better collaboration, those types of things. And I think if you don't do something like that, you end up doing bolt-on solutions that are technology driven versus business driven, client driven, solutions.
Yeah, just to wrap up on that too, and what you just said, Russ, I think is so paramount. I talk to so many clients, et cetera, that they want to build a new product, but it's a solution looking for a problem, and no one really has that issue. And the other thing that I would say along the lines of this, and Adam, I think you touched on it, but when you identify all of those initiatives, like the digital, transformation journey isn't a big bang. It shouldn't be run in a waterfall type mentality, like constant iteration. Like, let's prioritize, identify what, highest value versus lowest cost, trying to put some semblance of ROI, and then tackle those in a very iterative fashion. So we don't need to do everything at once. We want constant incremental improvements, I think is kind of the key takeaway that I've seen work well. Too many times people want the full solution. It's like, well, I can't pay for that, but I can do these little things, and the cost savings from that, or the value creation from that, will enable us to pay for the whole thing overall over time. But incremental improvement, I think, is what's really driving the speed to innovation.
We all consider sort of the build versus buy versus partner every time we go down one of these paths. I like the consistency across the four of us. We look at journeys, we look at prioritization, technologies and investments. Phil, you kind of quoted Amazon on, shiny objects don't last long. I would say, though, that, considering PACT and the purpose of the community that PACT is, and the idea of encouraging that sort of startup space and technology in the region, shiny objects might not last long, but the reason why they don't last might be different across them. Sometimes they just die. Sometimes they get acquired, and sometimes they become so normal that we don't look at them as shiny anymore. I mean, maybe, Russ, you and I both have a worldview that says, let's look for shiny objects and see if we can't do something with them in a product market fit that solves our company's problems.
Yeah.
And so how do you look at that? Like, there definitely are shiny objects, but they aren't all a bad idea.
Correct. I mean, everybody believes they have a shiny object, or else they wouldn't be, betting their second mortgage on their house, to kind of get that shiny object out there. So I think that's the biggest opportunity and challenge if you're a startup within the fintech space, is that, you alluded to it, Phil, in terms of, the cloud, that's reduced, that's in essence eliminated the moat for entry for any startup within the space. And then you combine that with data-driven APIs, The four of us could launch a startup tomorrow that connects to Plaid for data aggregation, is on AWS, and delivers a mobile application using a third-party insurance product. Or we can all get there really, really quickly. It gets down to that's product market fit,
just for what it's worth. That's it.
and what happens is, it's the proverbial product market fit. What problem are you trying to solve, or what unmet need have you identified, either through your own experiences within the industry of being a recovering financial advisor, or or whatever industry you're in. Really, do you truly have that product market fit? And I think the opportunity set is such, to your point, Warren, where sometimes there's something truly unique, and we see opportunities on where the puck is heading within the industry. And that's where, when you see that's where the puck is heading, that's where you start to lean into it. And one of the key macro themes that we see is this notion of kind of artificial intelligence is really becoming ubiquitous across the entire value chain of fintech. Whether it's back office technologies, middle office technologies, or front office experiences powering the financial advisor, or even reaching the end consumer in terms of hyper-personalization and kind of the expectation of the Netflix experience type of thing. Across that entire continuum, you're seeing artificial intelligence becoming, part of the course in terms of requirements. So when you think about that and the new shiny objects, it's looking for those companies who are utilizing artificial intelligence, machine learning, natural language processing in a way to deliver value that takes something, either supercharging the financial advisor, helping them be smarter, helping them be more efficient, or helping the client feel more personalized engagement, or creating back office, middle office efficiencies to create scale and eliminate risk. And so when we look at those 300 plus last year, we spoke to about 312 startup companies across the spectrum of fintech. And certainly there's ones that you're just like, yeah, good luck, and you say that with a smile. And then there's others you're like, all right, that's interesting. And that if the right capital, the right distribution, the right type of leadership, this could be something that's material that could create success in a broader market.
Yeah, and I would just add quickly that sometimes what makes it shiny is what you want. So I have a client that actually acquired a firm, not because of the product they were offering, but because of the underlying machine learning algorithms and the data science team that they had.
Yeah.
And so they didn't want the product, they wanted the people. And so they acquired the firm to bring them in to leverage the institutional knowledge and capability to build a better product. And so it was an interesting approach as we're all looking for talent now. I mean, the war for tech talent is just ridiculous. And so they made the kind of the pivot to say, rather than buying this product, which may or may not have value in the market, we can create a better one with this team. So they went out and bought the team. It was an interesting approach.
Yeah, we've certainly seen technologies and companies where we see one company that has some technology that does predictive analytics on life events. And when I say predictive analytics, major health events, divorce, kids, buying a second home, changing your job. Now, in concept, that's like, ooh, if I'm a financial planner, that's super interesting. But it's also super freaky and scary and kind of weird. And so it's really hard for them to get good product market fit, because while the technology, to your point, the technical assets, the IP, the capabilities is great, when you think about how does that fit within the market, it's hitting some friction points in terms of adoption and challenges within the space. And so it's just, certainly there's different levers that you look at in terms of pulling those levers in terms of value proposition from either making an investment or an acquisition. Absolutely.
To try to make this real, if I can, we talk about, my colleagues here have talked so much about AI and obviously empathy and so forth. And I was thinking about it, how do we bring that all together, especially for our audience? In a sense, at least what we've been saying is we've heard empathy a lot, right? So what does empathy really mean, right? We could look at the technical side of this and say, well, I know what my customer's journey is. But when we really think about trying to apply that in our own
I know he was going to say something compelling.
This is a really good point, too. Let me, while we wait for Adam to return, and he has priority when he returns, I would say, our view is, we kind of have different lenses when we're out there looking at the startup ecosystem. And realistically, Phil, like when we were thinking about something that's going to be internal and proprietary to Vanguard, we mostly want to find that team that's doing something that doesn't quite have a good solid product market fit, and maybe they don't even realize it might work for Vanguard's strategies because they don't understand our business, right? So that's like the sweet spot of what we look for. If it's internal and proprietary, if it's something that we want to impact the broader market, something that might be commodified or might help change a network effect type thing, then we would look for people and teams that have actually understand where they're targeting and are applying that technology. So I think, both of those can be great ways to build a startup. And it doesn't mean just because you don't know the right product market fit to target doesn't mean don't do it. So that would be something I would be really encouraging around. And I think Adam's business is a great example of, started by an experienced person who had a set of problems they already knew they wanted to solve, and they kind of knew why they needed to solve it. So, he's created a really interesting company. And, Russ, I don't know if you have any examples you want to share that you might have been public about. We've worked with a company called Force.ai that's building a pipeline of alternative data or unstructured data. They didn't necessarily have a use case in financial services, but we found them and we knew exactly what we wanted to solve. And we think that it'd be a great solution for the entire market. So we've partnered with Forge to try to build that capability and to help them to build it for us. And we're fine that if it works for us, it can work for other firms. We want to use it. We don't want to build it and run it, if that makes sense. So I don't know if you have anything in that space, Russ.
Yeah, I mean, we've made several investments over the course of time. I mean, I think one of the areas, one company is called Forward Lane, that we made an investment in that is in that artificial intelligence space, and it's really about supercharging a financial advisor with next best action and personalized advice. And so, when we think about technologies like that and how we might look at opportunities in terms of helping that advisor become more efficient, more effective, more scalable, more personalized. It's those types of things that we look at in terms of opportunity sets. And so, and there's other firms that, we tend to be a little bit more close to the vest in terms of who we announce and those types of things. But when we think about some of the areas, we really when we look at what SEI does as an enterprise in terms of how we power other financial intermediaries and how we want to create scale and efficiency relative to those, that's where we look at opportunity sets across what I'll call, again, that entire value chain of delivery. And I think to your point, there are certain times where there may be an opportunity to do a POC or to experiment with something. And so we equally, we partner with accelerators who are keenly focused on that in the fintech space. And that affords us kind of line of sight into, potential experiments where how might something work? How may this bring value to the market? And we try to look at things in terms of opportunity sets around, what if this is successful? And I think that's where, when we think about new opportunities, we try to think about, could this be a game changer? Could this redefine a sector or a space? Could this really leapfrog, not only SEI, but the diverse ecosystem of clients that we serve into that next wave?
We kind of, again, the two themes we're focusing on are broadly convergence of multiple products and services into some offering that may or may not be a single company that's providing. It's just the technical capabilities there. Phil mentioned, thanks to both cloud and APIs, more so APIs, which is the ability to bring together a lot of different data and services and build a product around it. And then digitization, which is kind of how the model is created. And a startup effectively doesn't necessarily make that digitization decision because they've gone in with that as their
start there.
Yeah. So Phil, what would you? I'm thinking, and this was driven by the acceleration was COVID created, right? So this was already happening, but I don't know if do either of you have any anecdotal discussion points around something that you've seen that truly started during sort of post-COVID, sometime from February or March of 2020, that you've seen significantly change that was accelerated that trend.
Yeah, so I can speak a little bit to working with some, mainly on the insurance side, where you have a lot of paper moving behind the scenes, less around your digital asset transfers, et cetera. But a lot of automation on the back office happened. Everyone went home, No one was in the physical office. There was, we're trying to reinvent how we move the back office, processes from start to finish without needing to physically be there, without, ultimately needing physical people. And so a lot of investments were in, as I know Russ mentioned, these AI driven or kind of pseudo like RPA, robotic process automation, but really on like the decision automation. How do we leverage our AI to make decisions using the data that we currently have, making those decisions, moving things forward, and then ultimately producing the outputs. Adam is back. Ultimately producing a lot of those outputs through a complete digital journey, without needing humans, not needing people, not even needing to click buttons to move from one to the other. Triggering everything to flow smoothly. And I think we've seen a rapid proliferation of some of those items in some of the larger organizations where you may have had, Bob talks to Sally, talks to Frank, talks to Sue. Like, we don't have that anymore. Now we're all digital anyway. So if we're reinventing the way we process behind the scenes, how do we leverage our technology to do that as well? And so we've seen a lot of that happen, across organizations.
Yeah, and Warren, to your question, we equally saw two key areas really emerge during the COVID crisis. I mean, certainly that connection between health and wealth. While it's always been something that's been important, I think certainly the emergence of COVID-19 and the sensitivities around health and wellness and kind of how those two things combined became front and center. And so we really saw the emergence and that being part of the conversation within the context. And we have, there's several startups that, we've been in conversation with. One is called Genivity, which really looks at, in the financial planning process and kind of how does health and wellness converge together. Another one that's become quite popular, which gets into a lot of the frictionless elements, is Trust and Will. They do a fantastic job and really, both for the financial advisor and the end consumer, really engaging with things that typically require the paper process and that human level of engagement. And so we've seen that both in the health and wealth, and then to Phil's comment, when we think about the insurance space, we've equally seen that kind of really become, we're all familiar with Lemonade or others that are very consumer focused, but we've also engaged with other companies. One company called Matic is a digital insurance organization that partners very squarely with in the banking services around really creating that frictionless experience, but leveraging data and eliminating that, the proverbial, it's not take a PDF and do a digital signature, it's all digital. It's leveraging data and really focusing on how to create that efficient experience. And so those things, back to Warren, your initial question, I think both the health and wellness, and again, that insurance convergence where, traditionally behind the curtain, it was 27 handoffs, couldn't occur. And how did that create that efficiency and scale?
I'm going to try to segue back to Adam to let you, Adam,
go back in time.
Pick up where you would like to pick up. Let me kind of connect the dots in terms of the piece where we lost you for a little bit. We talked a little bit about sort of anything that we saw that was really initiated during and since COVID, the outbreak started, and just significant changes that we saw there. One reason why I think it's really interesting to hear from you is, when we first got to know each other, you took, in my view, you almost took a contrarian view of things. You didn't start off wanting to digitize and automate and robotize like advice. You started off with intentionally wanting to create a tool to have that hybrid interaction, to help to augment the human to human. So one of the things that we were just speaking of is when everybody went home, some of the changes were around how internal operations work. That was what Phil was just discussing, and Russ just touched on some business models. And the cool example of Lemonade is, hey, they didn't choose to go API convergence route. They actually started their own insurance company. They didn't build rapidly by creating a marketplace for insurers. So there isn't one way to do it, which is really fascinating, and it makes Russ and me, it makes our jobs really interesting. But it also highlights there's always a good idea to follow. So Adam, just pick up where you'd like to with that.
Yeah. Well, look, thanks, Warren. It's funny with Asset Map. I don't know that we were trying to create the next tech company that was going to change the world, right? I mean, we were trying to solve our problem. Our problem was that our highest net worth clients were sick of getting 80-page reports, and they weren't reading them anyway. And by the way, neither were we. After 5 hours of prep time, they already knew we were smart, right? We didn't have to prove it. So And they weren't logging into their portals as much as we thought they would, right? We created this fantastic experience. This is 10 years ago, right? And so, what we really wanted to solve, the problem we were trying to solve was how do we take the complexity of their life and communicate it on one page and then give ourselves permission to point out what they could be doing. What else could they do? Have they thought about this? Can we look this from the legal, the tax, the insurance, the investment side? Can we start bringing in different people and collaborate on their current map, their treasure map, if you will, their financial X-ray? And so that process, it turns out, is actually pretty prolific. We all want to know where our junk is, right? And if someone would organize it, I think the key is we have to start thinking beyond the portal and a balance sheet, right? I mean, from our expression, it's your finances and the decisions you need to make around them are not just about the assets and liabilities. Oh, and by the way, the ones that conveniently are linked through Plaid, like that's so base. It doesn't solve the real problem because you're making decisions around income sources and insurance policies and people and trusts and businesses and crypto and offshore and split interest. And it gets complicated. It doesn't really work the way we've always done it. So I think for us, it was trying to reinvent the communication side, which was by nature humanly empathetic, because it just said, what's the problem? Right. Am I getting kicked out again? Oh no, it's okay. Technology doesn't like it. Anyway, so that's what I wanted to say before, and I wanted to plant the seed for everybody is to think about when we talk about empathy, right? It's easy to get so, cerebral about this concept of empathy and design thinking and next best action. And these are great words that I think bring together an entire concept. But the question I think for most people today is, how do I actually apply that? I mean, one of the things that I always think about is, how would Netflix solve this problem? How would Amazon actually solve this problem? And I think one of the things that I've always been kind of keen on is most of us have probably watched more Netflix during this pandemic than we've ever would have imagined we would. Right now I have Hulu and I have Disney and Paramount but all these, right? Our family needs it. They can't live without it. All of them do something that Netflix figured out really early. Do you know what they did? Netflix added something called people like you also watch this nonsense too. And so when you're finished watching your series of 800 shows, it says, by the way, now you can watch these 500 shows and you know where to go. Think about the size of the blockbuster as it used to be. Did you ever know 99% of those videos never got taken off the shelf? Everyone went to the new releases and the good old favorites. The same thing is true in Netflix. People are overwhelmed with choice. Guess where else this is evident? In financial services. People are overwhelmed with information and choice. They don't know where to go. Even the professionals are like, I'll just go to what I've always used. I'll sell the same old annuity I always sold, right? They're literally, we're creatures of habit. And the real challenge for technology is to figure out how do we help people make their next most obvious best action that they would want to have taken if they'd known about it. Mm-hmm. So one of the things that we've done, just to kind of round that out, is we actually allow people to overlay what your peers have done. So here's your treasure map, and now we'll overlay what other X generation or baby boomers or business owners have done so that you can see, oh, that's where that would fit. That's why long-term care is relevant. That's where a brokerage account might go. That's where this trust might fit. So the key is to help people get to their next best decision. And if you can do that, you can monetize it.
Yeah. I mean, that's spot on, Adam. I mean, I think that also ties into some of the key themes around that hyper-personalization is, people like you and really making things personalized, not a one-size-fits-all type of orientation. Yeah. And I think also you touch on this, and my language is also many times kind of the social components, but it's people like you who kind of have been here before typically do this. And it's embedding that element around kind of targeted education, personalized experiences, but also giving that element of, you're tracking in this direction. This is what others, because really you want to compel them to try to take that right next step. And you want them to be able to have transparency and visibility into, if I do this or I don't do this, this is kind of where things will happen. And that's that guidance, that's that advice element. And to your point, there's that comfort level of going back into the 60-40 and kind of putting it up on the table kind of thing. And it's how do you create that personalized experience at scale? And how do you do it in a way that creates meaning and connection to those clients? Yeah.
In about 15 minutes or so, we'll be breaking out and offering people a chance to get into roundtables that focus on either convergence, the discussion that we're having around these convergence ideas around products and services, or digitization. So just kind of heads up on that. So hopefully as we've gone through this discussion, people are getting a sense of what we want to talk about and what opportunities we have to ask questions later. Financial wellness, like what does that actually mean? Is that just another way is that an excuse to add more and more types of products to sell to make more money as an advisor? Or is it fundamentally something different? I don't know if anybody wants to take that as a question.
I'll start. Okay. I was going to say I can start from I can put the novice perspective out there. So when I started with the panel and started looking at, I actually did research, like, what does financial wellness even mean? Because I didn't have a definition. I didn't really know what that was. And so to me, what financial wellness is for me is clarity. It's me being able to see where I'm at today versus where I want to be, and then hopefully getting the right sound guidance and advice on how to get there. But for me, it was really just clarity and being able to see what I have, where I have it, what is it the right mix, kind of what does that look like? So for me as an investor or as an individual, my personal financial wellness was really about just understanding and clarity. But that's coming from a non-institutional investor perspective.
We've got a focus group of one to draw from for this discussion.
Well, we're all.
I know there are views from the two of you, Adam and Russ.
Oh, yeah.
We talked about it here.
No, we can go on forever about this. I mean, I have to beat Russ because Russ and I are going to say the same thing. I think it's a great point. I really actually appreciate, Phil, that you said it that way, because that's how 99% of the population thinks about it, right? We measure financial wellness by wait, is that my financial health? I guess that you're talking about balance sheet. Do I have enough capital, right? Am I in debt? Do I have enough income to cover my bills? Like, people are thinking at this base level because we don't have any financial literacy in the entire country. Like, we've just done such a horrible job. Right? This is where there's blue ocean, by the way, for those of us that will figure this out. Financial wellness, I think, from my perspective, is literally just how do you lift people to the next stage of their aspiration, right? How do I get healthier financially? And you're right, it starts with the basics. Well, what's the current state of my health? I don't even know. No one taught me how to do this. And that's why we think it's a huge opportunity for organizations and institutions and advisors to collectively bust this challenge by helping people get a framework to get healthier. And that's really, I think that's the start. We have to start with education. I know that sounds very global, but the key is enable and empower people to get educated. It's one of the things that we're focusing on, obviously, clearly. Let's start with an x-ray, financial x-ray. There you go. Now we can do health and we can bring in the right radiologists to read it. But that's my thought on it.
Yeah. I mean, I think, I love the comment, Phil, in terms of just that mindset, because I think how I define it is being able to answer the question of, am I okay? Mm-hmm. How am I doing? Am I okay? And no matter where you are within your life stage, whether you're in, the college graduate who's starting out and really focusing on cash flow and budgeting, answering the question of, am I okay? Across the broadest spectrum that you can paint. How much money am I putting out for health coverage? How much money am I putting out for insurance coverage? How much money am I saving for an emergency fund or paying off student debt? Am I okay? And being able to answer that question across all of the life stages, whether you're in wealth accumulation, wealth protection, wealth preservation, am I okay? And so being able to answer that question in a very holistic way, not about, is my retirement okay? Mm-hmm. But is my financial life okay? And as you even start to think about giving back to the community, wealth transfer, and other components of financial wellness are all part of that. And so to me, it's being able to answer that question in a holistic and comprehensive way, both no matter where you are within your financial journey.
It's traditionally people who were already very, very financially well had access to expertise that would ensure that they would remain so. And I think that between convergence and digitization, is it really a journey on the business side of things and in the startup space? And for us, is it really a journey to be able to expand that out to a wider and wider range of population to increase and reduce the cost and make it easier to deliver the same kinds of expertise that used to be only available to the very elite few? Is that one of the opportunity spaces that we're focusing on?
I think that's a great question and a challenge. I think the technology and convergence has democratized information and advice, but it's also created information and advice proliferation. And so I think you've got this kind of paradox of, I think there's much more access, greater access to information, financial advice, either digital, hybrid, human. And I think that's become much more available. But I think the downside of that is now it's almost proliferation of advice, and what kind of advice is the appropriate advice. And I think that's where you now need, that's to me where we see the financial intermediary actually providing the greatest value, because now you have kind of the educated consumer coming in with maybe certain perspectives on what they should or should not be doing. And then you have the financial advisor who can help guide them through that experience in a more personalized and meaningful and connected way that's engaging and supports them where they want to be supported. So it gets back to doing, in your bed, doing your policy. It's like connecting with the consumer, connecting with that investor at the right time, at the right place, in a way that and manner which they deem of value. And so I think that I think is the great opportunity that's in front, is how do we create that connection? How do we create that engagement? Mm-hmm. How do we provide that education at the right time, at the right way, and through the right channels that provide them all that insight?
I have to throw out something on top of it. And some people might think this is controversial, but this is my future forecast. So you can hold me to it, because I tend to say this more than once. The entire wellness of our country and that of the planet is not going to get better unless we empower and we enable through accessibility, opportunity, right? So what you're really talking about, Warren, in my opinion, is how do you lift the masses, which has the social benefit of lifting entire nations and peoples. And we all know the benefits of that long term. But here's how it actually happens on the ground. We need to pay attention to the fact that a lot of the financial resources, especially those are robotized, are owned at the advisor or firm level. They are captive to the organization that provides it. As an example, the app for my wellness is tied to my employer. If I leave my employer, do I keep my wellness app or do I lose it? If I leave my broker who's been good for me and he decides to retire, do I lose my entire financial plan and all that kind of? We have to move away. And I think Europe did this, I think, sooner with GDPR, from this idea that the advisor who provides or the institution that provides the financial engagement and wellness, that it's sticky to them. Their lives are not inextricably tied to us for the rest of their kind of experience. We need to create ownership of financial wellness at the consumer level, and then allow advisors to plug in to that, right? In other words, we're enabled. We need to work on this idea that the consumer is empowered and they're actually sharing their data back to the organizations and institutions that they look to for advice. And I think that's going to be the biggest challenge to bust, is ripping out that legacy architecture and the changing of the thought of who owns the data. And that's what's good, but it's going to be required to get wellness so that individuals can own it as opposed to just being a slave to it. And that's I think, really important.
That is a near and dear topic. That's the idea of disruption for the benefit of our actual intended consumer or client. Like, if we really are aligned with the needs of our clients, then we're for that. It reminds me of going back in time a little bit, the idea of portability of our phone numbers. When we had multiple carriers, we're dating. That may not resonate with many people anymore, but so. That is fascinating. And I think it ties to a question that we just got from Brendan, from our audience, which is, we see like platforms are growing and effectively, obviating some of the need to have that individual one-on-one interaction with just the right person at the right time. So how do we think about the financial advisor landscape changing as platforms make it easier for investors to be more self-directed, which frankly is a good thing, I believe, right? So how do we think that's going to change? Maybe that's, and SEI, you've got an interesting technology infrastructure that you build and leverage for financial advisors. Adam, you target advisors as, like, you sort of defined your customers two ways, and Vanguard, we have internal and external advisors that we work with. Phil, you see the business landscape and the rise of platforms, and you consult with firms that are trying to digitize and create that. Is there any sort of one or 2 points that you think we might be anticipating because of this? Any one of you?
Yeah,
I'll let Phil go.
Sure. So from my perspective, and I loved Adam's comment earlier about how would Netflix solve this problem, and also the component of people like you do this. Like I think with the self-directed, and just speaking personally, like I use a self-directed investment platform, Robinhood, and so as I'm going in there and making my investments, I have no idea if they're the right ones. Like I'm my own advisor at that point. But I would love to see, some advice, some guidance, some additional, people like you in your circumstances, not just my age and where I live, but like my background, my experience, like what I make, where I live, what's my family circumstances, what a whole bunch of different components. Like how do we define the right cohort or the right correlation of me with others and provide that kind of that guidance? Without that, I still think you need that financial advisor. Otherwise, you're all your independent financial advisors, and then you're just betting on yourself, whether or not you're a good stock picker. And so I still think there's an opportunity for a financial advisor, and whether that is human or whether that's somewhat pseudo digital, I don't know. But we'll love the kind of other opinions.
Well, I'll try to make that one quick. I'm a big believer that humans, by nature, when we have to make a very complicated decision, or there's a high cost of being wrong, we actually seek the advice of another human because we want to get it right. And for the financial professional world, that basically means there's kind of a relationship between those two. As it gets more complex and the higher cost of being wrong, we definitely want more humans. So estate planning, distribution, the tax planning, the stuff I can't afford to redo, I think there'll still be a place for humans to be advisors. I think also very much on a fee basis. So I think we're going to see a lot of the professionals who don't deliver advice, who don't lead with advice, basically get washed out of the business. I think we're going to see that change over the next 10 years. We've seen McKinsey did a massive research study on this, kind of saying the same thing. That's what we've seen in the business. People are expecting more from their professional. They're expecting more for their value and their dollar because they can do what you just did, Phil. They can go and get their asset management for free. Now, granted, they're not getting the holistic view, and you're going to rely upon an algorithm to tell you, hey, yeah, you should probably consider life insurance at this point, and here's 5 companies you can use. And that will work. That distribution model will work at scale. Is it going to get you the most efficient thing for you? As you grow in wealth, you're going to start caring more about efficiency because the margins really matter. They become bigger numbers. And so I think advisors will still stay very much in the high net worth space, but they'll be using robo and digital to engage and enable themselves.
Yeah, I mean, I think both comments are spot on. I think there's that combination. If we look back at 2010, when the robo advisors really kind of emerged in totality, within the marketplace, there was this natural knee-jerk reaction and challenge that are they going to become the future? Are the Betterments, the Wealth Fronts, the Gem Steps, Sig Figs, and others going to become the future state? And I think there was this natural kind of like reaction to the marketplace. But then if you looked at the transition of the marketplace then went to maybe it's not just purely technology. Maybe we need to be able to have this hybrid type of model where there's a financial advisor, to your point, Adam, where there's more complexity, there's more questions. I don't want to be wrong in these types of material types of decisions. And then I think what you started to then recognize was that the marketplace then saw there's value in the digital experiences. They brought forth those disruptors within the space, brought forth digital engagement experiences to be able to kind of view, experiment, tinker, ask questions, and learn, but still valued the human connection, still valued that human engagement. And I think there's also, I think that's the future. The future is, how do we provide the human component in a digitally enabled and engaging way? And that will always be a factor. But I also think when you think about kind of the continuum of the consumer in terms, and I think, Adam, you're spot on in terms of the complexities. So somebody who's just in that early accumulation phase, who can use a TurboTax, who can use a Lemonade for their insurance, and has a paycheck where they're just in wealth accumulation, college graduate who's using Chime as their bank, and wants to use fully, brokerage types of solutions or other types of turnkey investment solutions. they're simple and complex. And so the human interaction may be mom and dad or peers in a social component of it. But as that complexity becomes with mortgages, with kids, life insurance, and more complex tax situations, that's where that human advisor becomes more and more important, provide that guidance. And even then, when you're talking about, the earlier comment around kind of product proliferation, information proliferation, what is the right insurance product for me? Is it term life or is it some other type of solution? That's where you need that guidance depending upon where you're heading. And so I think there's those kind of two combinations of things that are happening, both I think a baseline expectation of digital engagement and then almost a continuum arc of complexity and questions and engagement.
I'm going to join the focus group and make it a focus group of two. I'll join it with Phil. I would say I think there's a huge opportunity space that will never go away for advisors, for people who say, I don't really want to know what people like me are doing because I don't want to do that. I want to know what people who I aspire to be like are doing. And effectively, somebody who can help me answer the unknown unknowns. Like, I don't necessarily know what to ask. So I think that's why the digitization of the way firms like Vanguard or Asset Map or SEI deliver what we do is fantastic, but it's more about augmented intelligence and sort of the AI that we use, the term, everybody's talking about artificial intelligence, but augmented intelligence, whether that's enabling self-directed investing and advice through robo or internally. And so, as we get closer to wrap this and break into our breakout rooms, the idea of augmented intelligence, I don't know, does anybody want to touch on that? Because one of the areas where we talked about earlier was education. So education might be how somebody like me would find out what I do not know that I do not know. And so, are we looking at that? Is it social? Or what is it?
I have an opinion on that. If I could just say, so one of the challenges that we found actually delivering a financial X-ray is people don't know how to read it, right? So everyone, can you give me clarity and put on one page, and can you show me what my peers are doing? Okay, but it doesn't ask the fundamental question that Phil asked originally, which is, am I okay, right? And so one of the things that we said is maybe there's a way to do this simple, stupid, right? Can we just tell people that basically like red light, green light, yellow light, that if these events happen in your life, you would be okay or not okay. Like if you, God forbid, lost your life early, premature death, could your family be okay? I want to know that. Red light. Give me a red light if it's bad, and then I'll go talk to somebody, or maybe you'll help me solve that from a room. So we actually introduced this. It's kind of like scrappy AI, just using traditional financial planning formulas to look at the household and say, hey, pay attention to this. The reason I mention it and bring it up here is because we have found that in a lot of investment advisors, which tends to dominate the wealth management space, they don't like talking about the protection strategies. They don't like talking about insurance and long-term care. Either they don't sell it or they don't know it or they don't like it. They think it's expensive, whatever the reason is. But these are real issues. It's like being a car mechanic and saying, I don't check the tire pressure because I focus on engine performance. I'm like, I drive with my family in this car. Like, tell me if the tire pressure is low. So I think we're doing a disservice in general in the space because advisors don't have an easy way to just say you're okay from a diagnostic standpoint. Like, your cholesterol is high. Like, I think I want to know that. Tell me. Like, don't make me ask you. And I think we're going to getting back to this place where robo might be a better, more efficient way of informing the customer that they're not healthy. So that's why I want to go out there.
Yeah, Warren, I'll but I think augmented intelligence around artificial intelligence is an area that we're keenly focused on. And really what we try to think about is how do you supercharge the financial advisor with AI? How do you help that financial advisor get smarter and more efficient? And I think that's where when we look at things like predictive analytics, when we look at things like next best action, that's where if you're a financial advisor who's managing a book of business of 300 or 400 clients, leveraging artificial intelligence to scan the market, scan the news sources, scan what's going on within your clients' portfolios, and be smart about representing to you, hey, maybe you do want to call Warren because in his portfolio he holds X and here's a news event that's X. Warren may want to know, am I going to be okay to answer those questions? Here's a thing to contact Warren about. And so it's making the advisor more efficient, but also smarter, so that they're not always calling the same top 10 clients, top 10% of their client base, but they're really engaging them with meaningful and relevant and personalized conversations. And so we look at that supercharging that augmented intelligence across the entire spectrum, whether it's in the RegTech side on AML and KYC, and how can you get people to be smarter about that and more efficient, all the way up through, what should we call Warren as a client, and how do we engage them in a meaningful and personalized dialogue.
All right, well,
I hate to end this conversation, but it has been really good. And we now have time. Please stick around to enter a room of your choice to continue the dialogue. What we're going to do, and again, I want to thank Phil, Adam, Russ, and Warren. Once again, I want to thank your organizations for sponsoring Baker Tilly, Vanguard, and SEI. And we're now going to move into rooms to continue the conversation for a little over 20 minutes. We won't come back after that. So we're going to disperse people to the rooms, have your conversations. And again, we'll finish up around 10 o'clock and get everybody on their way. But again, thank you all, panelists, for your involvement, and look forward to continuing the conversation in some side rooms. Heidi's going to launch those. You'll be able to click on them and head off to, like I said, the room of your choice.
Cool.